Hello and good morning. It's Friday the 22nd, and you may see from the slight change of scene, I'm coming to you from a sunny London landscape. Back from the Leeds trip, very successful, but back at the desk in the London HQ as of this morning. Just looking back before the weekend, on Friday you may remember that the market, certainly sterling dollar, was challenging the 140 mark. You know, sterling was very much on the front foot and looking forward to hopefully ending the week on a high. That was coming from the back of Brexit confidence and also some hawkish comments from the Bank of England relating to interest rates. However, then retail sales happened, and it was frankly a disappointment. The December data declined 1.6%, and it dragged the year-on-year growth down to half of the forecasted levels. As naturally as the case with disappointing data, the relevant currency declines, and sterling slumped on the back of this, dropping down to about 138.40. If memory recalls. We'll actually pop the exact levels in the comments below if you're interested. By the close, it had posted a slight recovery up over 138.60, and that in turn was helped slightly by stateside data, where the University of Michigan sentiment index also disappointed against forecasts. So thanks very much, University of Michigan. Keep up the good work. Over the weekend, Saturday marked the anniversary of Donald Trump as president. Time certainly flies when you're having fun, and he is, by all reports, one of the biggest clowns in the circus. Markets, on the other hand, may take this opportunity to reassess performance, the actuals of the last year, against some of the campaign pledges that he was obviously very vocal about before and during his first 100 days. And very timely opportunity to do this with the government in shutdown now. Poor old Donald obviously had to cancel his anniversary party plans in favour of trying to drum up a bit more support and garner an agreement for Congress. And indeed, there are rumours suggesting that he may actually back out of his commitments with Davos this year. What with the homegrown pressures being of more importance. Looking back over the year, again, exact data we'll post in the comments below, but the dollar has fallen about 11%, against a basket of currencies. The US economy is growing at 3%, which is the highest across the G7, and their domestic interest rates have been hiked 3 times. Yet across all of that, the dollar is largely weaker, which causes us to remember, the early stage calls that Trump was making. He very much wanted a weaker dollar to negate the competitive advantage, that he called it, that a number of the US trading partners were having just from a currency perspective. So looking ahead, today there's little of interest on the calendar in the UK or the US. Across the channel in the Eurozone, there is the Eurogroup meeting, which is likely to discuss, if not agree, to the stance that the Brexit talks may take over this transition period. Largely any Brexit comments that we hear throughout the day stand to maybe reinvigor the sterling support, whilst meanwhile any the euro as a currency may well be sensitive to any developments that come from the Eurozone surrounding the German coalition. Tomorrow we've got the Japanese interest rate decision. Expect that to pass fairly quietly. No changes expected certainly at the moment. Wednesday we've got the UK employment data. This could bring in a third tangible concern for sterling following the inflation and then Friday's retail sales. Forecasts are suggesting a slight slowing of the growth in what is already a very tight labour market. Finally, on Thursday, we've got the ECB rate decision and obviously associated press conference, and then the UK and US Q4 GDP data release usually provides a nice compare and contrast. Friday is all but blank on the calendar, so expectation is for a fairly slow end to the week with fairly range-bound trading. I'll keep you posted as best I can throughout the week. Any questions, any comments, pop them in the comments below, or tweet me on at FXPlu. Ask anything you like, and if you use the hashtag AskPlu, it'll get to the top of the chain. All right, everyone. Thanks very much. See you again.